Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Senior Technical Analyst with Market Rebellion, and this has been one heck of a week. If you're watching the markets, you'll see that the last few days have been very treacherous for investors and even some traders. But the good news is for our option traders, we are positioned very well with what's called negative delta positions. These are put spreads that actually make money on the way down. So if you are subscribed to our channel, you've liked our channel, you've commented on our channel, and you click on the notification bell, then guess what? You're going to get these reports each and every week. But as a member, you get the midweek report. And let me tell you what happened this Wednesday. I went out, did the midweek report right here, and we had a target price on the upside did not hit for the diamonds, but I did say that on Thursday we would most likely go up to test this 20 period moving average. And guess what? That's exactly what happened and failed. And Friday it came back down exactly like I said it would. Now, moving forward, I have to take a step back here and look at this chart a little bit more closely because we have a very dramatic increase in volume here. That generally tells us that the sellers are motivated. So, without getting too far into the banking news that has released this week, I'm going to suggest that we're going to go down a little bit more on Monday, and then we'll have to see a drop in volume could lead us a little bit higher. But right now, we are now closed below that roll reversal support level up there at 325.06. I'm putting a downside target of 317.01, another 2 to almost 300 points lower next Monday, possibly Tuesday. And then what I'm going to do on Wednesday is I'll put more hard line zip lines here to give you an idea of how we'll close towards the end of next week. We have to take this market right now almost one day at a time, not 1 week at a time, as we've suggested. I just want to give a shout out to Mark Toon. He's one of our followers on YouTube, and he had a really good suggestion that we go in some sort of order each and every week so he could track his prices. Now, notice what I did here. I put that little data box up there at 317.10. That is the target for next week, and then I'll reevaluate Monday. But out to Mark, I'm going to be doing these now, thanks to you, in alphabetical order. So the next one up is going to be IWM. You could see here we failed to get over that moving average. Not only did we fail to get over that moving average, but that is a bearish engulfing candle to boot. Now we have to be careful here because this is a long stretch of red known as a stale red light right there. And so we could go a little bit lower on Monday with IWM, but you have to understand that there's also a gap above the market now. So I'm going to do a two-parter on IWM. I think we're going to go a little bit lower Monday, Tuesday, and then I think we're going to start to bounce and possibly even move back up towards filling that gap. So downside target on IWM is 173.29, then a pivot up to 180.05, and that's IWM. Next one up, QQQ. That one was an absolute perfect forecast. For those of you that were following, last week I said we would most likely move up to fill that gap. It did right there on the 6th of March. We filled that gap and then pivoted right back down, hitting my downside target of 294.74 yesterday. Now, again, we got the same story here. I think we're going to go a little bit lower on the Qs. And then what I'm going to do is reevaluate on Wednesday. So for now, downside target at 283.67. Momentum indicators are still pointing lower. And that is, again, all due to the selling pressure and a fallout of these banks collapsing. Silvergate and Silicon Valley Bank and some of the other ones that are on deck for possible problems down the road. Regulators even, I'll get to this in a little bit, but you have to understand Credit Suisse is even hesitating to put their information in with the regulators, and they're the second largest bank in Switzerland. God help us if that starts to fail. That's going to start the chain reaction and all the banks that might be considered too big to fail banks. And nothing at this point is too big to fail at anything, that's for sure. All right, so that's the Qs. SPY is perfect target hit there. We hit the downside target. Yes, actually, we hit the downside target on Tuesday right here. Filled this gap, bounced a little bit on that gap fill, and now we have another increase in volume. So I'm going to go SPY a little bit down right there, just a little bit more to 383.34. And then I think we're going to see some sort of a bounce. Look at this wide divergence that we have from that moving average. You see that? That is incredible. The market does not like to stay that far below or even that far above, for that matter, above that moving average. So again, downside target to reiterate 383.34, and then we're going to see 390.77, $390.77 on the upside, and that's SPY. The biggest story of the week, I think, in my book at least, is the VIX. Look at that. Said it would bounce off of that support level. That's what I drew last week. 1778 did just that, pivoted, didn't hit the downside target, but most definitely bounced. And in a very short period of time, came right up to hit that upside target of 2301. Now, I'm leaving that in there only because I want to use that as a new trend or a leg up. I think the VIX is going to pull back next week right in this general area and then start the next bounce higher. That high right now up there around 29 is going to act as a resistance. So keep your eye on that one. Downside target on the VIX is 2232. And then I think we're going to bounce right after that going to 2355. Now, if we look at the geopolitical news here, let me get rid of that little camera down there. If you look at the geopolitical news, this came out earlier in the week through Yahoo Finance. The millennials are sinking under the weight of their debts. Well, isn't that surprising? Well, not so much, really, because if you look at what I've been talking about with auto loans and the creative financing these auto dealers are putting into place, people are getting in over the heads. I've been talking about debt. I've been talking about China. I've been talking about a lot of things that I tell people don't ignore. I have not, by the way, I have not changed my bias to the downside. I do not flip back and forth. I hold the line. Many of you know I take a lot of slings and arrows for that line that I hold, but I'm not flip-flopping. I still see prices down a lot more from here. I still have my target set for the March 2020 lows across the board, and this is not helping the economy one single bit. Now, earlier this week on March 7th, just a few days ago, China used some very strong words here, and I keep telling people, keep your eyes on China, right? Well, the conflict and confrontation is what they say. They're threatening with conflict and confrontation. Understand, their translators pick their words very literally and carefully. They don't want to mess up and have a misinterpretation of the translation. This is something that you want to keep an eye on again. And this I do not find as a coincidence. The Wall Street Journal reported on this, where a Chinese cargo ship and a fishing vessel both damaged communication cables that connected to the main island in their microwave radio transmission cable. Now, this is beyond what I think could be an accident. I think this is coming under the guise of an accident, and I think it was intentional. You know, being in the Navy, I'm going to tell you right now, those ships would have had to have run aground to sever those cables, right? That, again, I think this is a smokescreen. You got to watch out. And I think that there's something going on that we all need to pay very close attention to. God help us again if we move into World War III. We do not have the resources, the manpower. We don't have any of what you think we have to fight a war on two fronts. And so this is something that we all need to take very seriously. Now, this is what a normal yield curve looks like. This is normal. This is not normal, folks. This is what we have. In fact, I think the inversion is a little bit deeper than what we have on this chart. At one point during the week, I haven't checked the current levels, but we were 103 basis points inverted, and that hasn't happened since the late 70s into the early 80s. And so this is leading us right into what I'm going to label right now as the Great Recession. I'm not going to go out and call a depression, because the only difference between a recession and a depression is the length of time that we stay in a recession. No one's going to call that out right now, but based on what I'm seeing on the yield curve, I'm going to call it the Great Recession is imminent. And so that is not a bad thing, actually, folks. You got to understand that we need recessions to keep inflation in check and to calm the price action down and to get people back on their feet and to build a base, more or less, to get out of their debt. We need that over time, periodically, in a cycle. So don't fear it, embrace it, understand it, and capture profits from it. How do you do that? Well, if you look at what's happening with the Fed, they're doing the exact opposite of what they did in 2020 with quantitative easing. Quantitative easing, for those of you that are not really following the money supply, quantitative easing is when the Fed pumps money into the system. Quantitative tightening is when they pull money out. And this is showing us that we're now at levels lower than where we are in 1980. So they're pulling money out of M2. This is year to year in percentage here. You see this? And so that's a dramatic change in the money supply, which again will affect interest rates, it will affect the value of the dollar, and it will affect the underlying markets. Now I'm going to tell you right now, before we wrap things up, I make my silver trading very public. I got into more of the silver position today, right around noon. And I was reading this article 3 days ago, and this makes a lot of sense to me. The demand for physical as an industrial metal is on the rise, and a lot of that has to do with solar energy production. I don't think this is going to slow down. I think it's going to ramp up, actually. I may not be around in 2050 to do these market reports, but if we can catch a trend starting right now, you combine the value of silver as an industrial metal combined with it being more of a currency, you're going to find that silver could become very attractive for people that may not know where to park their money. It could be more or less a safe haven. Let me show you something on a weekly chart that I find very interesting on silver. This to me looks like a very well-defined cup. It's pulled back from the brim of the cup, and now here we are. I think we're going to see a follow-through just like this. Now look at the timeline. This is not going to happen immediately. This could work its way into a possible breakout of that rim or brim, as they call it, sometime maybe June, July. So don't think this is going to happen instantaneously, but that's one of the reasons why I am accumulating more and more silver. If I buy silver down here and I go back to the daily chart, just showing you how I trade it, if it gets back up to fill this gap up here, and I start to see shooting stars or bearish engulfing candles or maybe a hanging man candle up here, I will then sell 10 or possibly 15% of my position to raise enough cash to go ahead and buy more back if it pulls back and then bounces at a lower level. So the cash I generate up here is used to buy more shares, and that's how I parlay the position. It's really that simple. And I want to thank you all for liking, sharing, subscribing, hitting the notification bell. Keep sharing it, share, because it's helping us build the channel, and you're helping other people get to learn how to read the candle charts. And so stay tuned to Market Rebellion. Stay tuned to this alert. Stay tuned to the Wednesday midweek report. And with that, have a great weekend, and I'll talk to you on Wednesday. So long. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. You might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here, and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol, using the 7-point checklist that I have, and determine who is in control of that price action. I'm AJ Monte, and this is my 7-point trading checklist.